Hello, and welcome to CMS Forex News. I'm Nick Nassad. Today is Friday, June 13, 2008. In New Zealand, overall retail sales grew 1% in April, while retail sales excluding autos declined 0.5% for the second straight month. The Reserve Bank of New Zealand has signaled that it will lower rates this year from the current record high of 8.25%. The past two retail sales releases have shown that the economy is starting to cool off. The New Zealand dollar got a boost following the better-than-expected headline number, but those gains were pared down quickly, and the Kiwi lost ground to the greenback during the European session. The Kiwi found support near 0.7445, from which it recovered to get back to the levels at which it started the session. With the Fed looking like it will raise rates and the New Zealand Central Bank considering cutting rates, the greenback should have the advantage going forward. The Bank of Japan held rates steady at 0.5% as policymakers are watching the effects of high inflation, especially on oil and food prices, which can slow current expectations for economic growth. Firms are facing higher production costs, which are squeezing profits and causing some companies to lay off staff. The bank signaled that the economy was at a turning point and that the longest post-war expansion may be over. Consumer confidence fell again in Japan, dropping to 33.9, which is below the consensus forecast and is the lowest level since December of 2001. With the Japanese economy sputtering, households have already cut back on spending in response, while their moods continue to sour. In Germany, the final version of consumer inflation for May matched the preliminary estimate. Prices were up 0.6% on the month and 3% on the year. The EU harmonized CPI grew faster than the initial estimate. Price increases were led by fuel, including diesel and gasoline. Labor costs grew 3.3% in the first quarter, the fastest rate since 2003. The increase was larger than forecast, as workers are negotiating higher salaries in the face of higher inflation. This is exactly the scenario the ECB spelled out in its monthly report, that higher inflation will cause second-round effects such as wages to rise into an inflation spiral. ECB President Trichet signaled that recent data has caused a discussion in the last meeting where several policy members pressed for an interest rate increase in July. The number of people employed in the euro area rose 0.3% in the first quarter, which amounts to 446,000 jobs. This figure matched the fourth quarter, where employment was revised up. From a year earlier, employment growth slowed to 1.6% increase compared to the 1.8% increase in the fourth quarter. Consumer prices rose 0.6% in the U.S. in the month in May, higher than the consensus forecast and increasing strongly on the 0.2% increase seen in April. On an annual pace, prices climbed 4.2% after a 3.9% year-over-year gain in April. The main culprit in boosting prices was energy products. The figure will be worrisome for the Fed, which has recently changed its bias from saving the economy from a recession to now anchoring inflation expectations. The 0.6% increase in the CPI is the largest since November and will pressure the FOMC to consider raising rates in order to curb inflation. The University of Michigan Consumer Sentiment Index fell for the fifth straight month, registering a 56.7 reading for June, the lowest level since 1980. Current conditions deteriorated, while inflation expectations for the next year edged down slightly to 5.1%. The euro-dollar rose to a session high at 1.5480 last evening, but proceeded to dip 180 pips off that high to test critical support at 1.53. With the Fed again turning its attention to inflation, speculation has increased that the Fed may increase rates. For the week, the dollar was heading for its biggest gain since 2005, though at the end of last week the euro had a strong rally which was cut down this week. The dollar continued its gains against the Swiss franc and the Japanese yen. The greenback gained almost 3% over the week on the Swiss franc, a rally of 300 pips. U.S. equities ended on a strong note after weaker sessions on Wednesday and Thursday. In Canada, manufacturers' factory sales rose by a sharp 2% in April, following a weak March. Gains were broadly based as 17 of the 21 industries reported increases in sales. The industry with the biggest sales gains was petroleum products. Labor productivity in Canada decreased 0.3%, another decline following a 0.7% fall in the fourth quarter. The decline in productivity as well as reduction of capacity utilization rate indicates that businesses and industries are pulling back in response to a slowing economy. Although today's manufacturing shipments figure bested forecasts by a long shot, the weaker new orders component indicated soft demand. The US dollar-Canadian dollar pair rose 70 pips this session and is 130 pips higher than the support at 1.0150 tested on Wednesday. The loonie gained in the middle of the week following its central bank decision, but has given up most of those gains in the latter half of the week. Next week starts with retail sales from Switzerland, CPI from the Eurozone, and the New York Empire Manufacturing Index in the US. Tuesday, the UK releases consumer prices, and the Eurozone and Germany post their ZEW economic sentiment measures. Tuesday morning, the US releases data on housing starts and permits, along with producer prices, current account, and industrial production. And that wraps up this week in the Forex markets. Thank you very much for joining us here at CMSFX.com, and have a safe and happy weekend.